Hey YouTube, what's going on? Chris here. Want to bring you guys a little update on Bitcoin, some of the things I'm seeing, guys. We're going to step back. We're going to look at some patterns today as opposed to being zoomed up inside of this triangle so much. We're going to be stepping back, looking at things, guys, looking at some Fibonacci, different areas, different targets, things like that. So if you guys like these videos, these daily videos, please hit that like, subscribe, all that. We're trying to get another 100 likes on this video, guys. And if you guys give me those, I'll just keep them coming for you the best that I can. So I'm really appreciative of each and every one of you, and I thank you for being here with us. So guys, what we're going to be looking at here today, we know that the ETF was canceled. I did a video on it last night when the news was breaking, and we haven't seen a lot of downside action. And that's what I was kind of questioning, guys, is it already factored in, or are we still just kind of in that stalemate and then we're going to get slammed in a couple days? So that's what I want you guys to put down low. Do you feel like all this downward price action and everything once we broke down from that 6,000, I mean, was all this factored into it? And do you feel like that 3,200 was the bottom? Are we going to hit some type of double bottom out of this, or do you feel like we're going to be going straight up from here? What do you guys see that's going on? And I'm going to kind of give you my opinion on things as well. So guys, first of all, I want to look at the Fibonacci. So you can see here, when we broke down out of this, we had that massive fall out of that descending triangle. And what we had there, guys, we fell all the way down to this around 3,200, we'll call it, right in there. Now guys, our reaction, we got up through the 0.236, but we didn't even make it up through the 0.382, which guys, on a lot of these reactions, these falls, we've been having a 0.618 reaction. So in all actuality, we should have came back up to around this 50, 49, 27, or up to 53, 32, and we didn't even come close to that, guys. And now we're actually below the 0.236 Fibonacci, that $4,020, which is a very, very big deal. That is hard to get up above, to break that resistance and then to consolidate up above that and then make your next move up. It takes a lot, guys. So that's what I want you to pay attention to on this Fibonacci here. We didn't get the type of bounce that we would have wanted. So if I take the Fibonacci off here, guys, what I want to show you here is, if we go out to this a little bit, take a look at this. So we're going to pull our Fibonacci and look where that reaction went to. It went to that 0.618, and then guys would short that from there, and it went back down. So that's what I'm saying. This bounce we just had, I mean, it's the equivalent of getting up to right here and then just potentially rolling back over. So we did not get a strong reaction. This is really, guys, a serious dead cat bounce here, in my opinion, what's going on. And we also have that bear pennant in a way that's forming. So when you factor in the news, guys, you factor in these patterns, all the things that I'm going to be showing you today, you definitely want to plan for the downside. Am I saying we can't go up? No way. Anything can happen in cryptocurrency, guys. We could wake up tomorrow and Bitcoin could bounce $1,000 in a night. We've seen it happen before. So I'm never, ever going to say that it can't go up. But right now we have more indicators that are pointing to the downside. So guys, next we're going to be looking at this little triangle that we've been forming here. So this white line here is our support at the bottom. And then this is what I feel is our super, super overhead resistance here, guys. That's going to be really, really tough to get over, that 57, 5800, where we had all this for so long. That's going to be massive overhead resistance. The bears most likely are going to be stalking that area. If we do get a bounce up to that area at some point, people are going to be wanting to jump on that. So just a fair warning to a lot of people. But we'll have to see what happens at that time, guys. If we're making higher highs and higher lows and it's just not some one, beanstalk shot all the way up to there, then who knows? Maybe we could have a chance at breaking that. But, in the future, obviously. Not any time right now. But so, guys, what I want to show you here is we're making the lower highs, higher lows, right? And we've just been grinding on this trend line. And as we've been talking about trend lines, guys, remember, the wider the gap here, and then it comes back on and we've been moving up it, the stronger this trend line is right now. So if it breaks, that means it's going to break more violently than if you didn't have this large gap in between here. Because think, guys, it gapped like this and then it came back to close to around that same price there. So it held. It didn't just roll completely over. So this trend line is very important. And even take a look at this wick here that we wicked below. That was testing that trend line. Do you see that? Guys bought that up right there. So that's something we want to pay attention to, because we're still up above this trend line, guys. We've been, and this is on the 4 hour, just so you guys know, we've been closing up above that for now, but we have a lot of things that are coming overhead that we have to pay attention to. All right. Now, say we were to make a move you have to look at all your moving averages overhead, and then also you have to look to see if we're going to be bouncing off this trend line right here, just like how we were wicking up through it here, which is important. Because remember, guys, these can break either way. They can break down, they can break up. But what's the way of the trend been? It's been down, right? We're looking at all the different things. Take a look at this volume, guys. All right? If we're ready to make a move to the upside, volume would be looking different. It would be increasing. And look what's happening with the volume. It's decreasing right now. So when volume shrinks like that, you're going to have a violent move either to the upside or to the downside, because volume's so low. When you have one of these whales come in, it could either push it violently to the downside, and then it'll start triggering stops and different things like that, and then it just cascades upon itself. And that's how it happens, guys. And then to the upside, guys who are shorting are going to have to cover with their buy market stops or whatnot, and then they have to cover, and that fuels the bull run or the move up, the bull move up. So that's kind of how these things work, guys, and that's what I just want to show you. Like, really pay attention to trend line breaks. I can't emphasize that enough. I think that's one of the #1 things now, the more that I've been studying it, serious trend line breaks with confirmation, guys. I mean, there's a lot of times you can make 20 to 50% on trend line breaks, just like from that 6,000 all the way down to 3,200, guys, from those breaks out of that descending triangle. And that was the way. The way was down, and that's what we're saying. Is this going to be a bear pennant that goes down, breaks down? So that's what I'm looking at. Now, guys, we're going to step out from here now. I like clearing stuff off so you guys can see we're not going to have stuff all over the place. So let's get this out. We talked about the volume. We talked about the lower highs and higher lows. We talked about the support here, overhead resistance. You know, you're going to have this area here, guys, overhead resistance around that 38. And then you're definitely going to have it around here, that 41, 42, right in that area, 43. There's going to be a lot of overhead resistance here. So plan on those, guys. Have these as targets. Now, the next thing we're going to look at, let's do our RSI and kind of see if we have any divergences, convergences, anything like that. All right. But it's nice sometimes, guys, not to have the MACD and the RSI and all that type of stuff on there, where you can really just look at the formations of the patterns of the candles and different things like that. It's interesting. You even pull off the moving averages sometimes, guys, and just watch the flow of the candles and just kind of just work that Eastern technique. Now, before you make any trades, obviously, throw your Western indicators in with it, your MACD, your RSI, all that. But it is just fascinating to watch the candles and watch everything play. It's like music, guys. It's like reading music. The more you study it and you notice things, you go, oh, that's the equivalent to this or that, and it's interesting. So let's see here, guys. Let's do our RSI now. All right. So, guys, our RSI right now is at 50 here on the 4-hour. So we're just kind of in that neutral territory. One thing I do see, we would want to draw trend line right here. Pay attention to that. Guys, see what that's going to do. And then also, I'm going to draw this here. And we'll see what happens with that. We're going to see if we break out of that, break down out of that. Because remember, guys, RSI is very crucial. Remember, you want to put those trend lines on it, all different things like that. Another trend line that I would draw on this, guys, and this is just if I'm doing it myself, looking at things, I'm going to pay attention to that one right there as well. We'll put that in a different color. Okay, so those are the two I'm watching. I'm going to see if we get a break out of this, then I'm going to see if we break this overall one here. And then this is the bottom trend line that I'm watching because we're making those higher lows. All right, guys, and then you could also do a little support right down there, too. You could draw another line around that 19. We had to bounce off 19 after we had that sell-off. We went to 19, and then we moved up all the way to 67. So that's why buying those dips, guys, it can be a good thing if you know that you're going to sell and you're just going to play that reaction. If that makes sense. Remember, we talked about we don't want to be hodling coins in a bear market. There's nothing wrong with playing a reaction, guys. You see this big fall and then playing a reaction. It's just you have to know most likely you have to get out. Like right here, we had a fall. We had our reaction. Know to sell these tops, these tweezers here, and get out because most likely you're going to be going lower. You have these lower lows that are taking place. And then you can see that trend reverse, and you see the first higher low here. Higher high, higher low, higher high, higher low, higher high. And that's how the trend changes. And then we had our consolidation here to find out if we were going to accept that price. And then we drop back down. Now we're working this little channel here. So we'd want to draw, our support around that 35, 44, somewhere right in that area. So No, guys, these are the things that I look at, though. I'm just kind of going through with you now how I would go through by myself. If I'm just looking at all these different things, I just want to look at different indicators, Bollinger Bands, all different types of stuff, and just kind of see where we're at. Now, in the 4 hours here, we have the histogram starting to tick back up a little bit. We have our MACD line here that's moving up, staying on top of that signal line right there. So that's positive, but remember that MACD is a lagging indicator, so it could have been from the last little move that we had up right here before it potentially rolls back over. But we're going to keep an eye on that, guys. Then let's also do the Bollinger Bands. Let's see here. So we're starting to get that squeeze, guys, and when you get the squeeze, remember how we've been on the trend lines as well. You're waiting for that break, either to the upside or to the downside. When they contract, that's the move. And then when you get that really, really tight squeeze, you're going to know that a break's coming in some type of a way. So keep our eye on that type of stuff, guys, and really pay attention to the Bollinger Bands. They're a very, very good indicator that you want to pay attention to. Okay. Now, guys, we're just going to step back a little bit farther and see if we see anything. Anything else? But look at these reactions, guys. We went through that, so I gave you that example here, right? Now let's check this one. See how close we got to that 0.618. And this is what I like to do, guys. I like to go back through the charts and look at old history and different things and kind of see how they were reacting to different stuff, even wicks and all that. I want to get into where I put my stop loss in cryptocurrency so I don't get stopped out all the time. I want to do a video on that. I may get to it today. I would love to do that for you guys. I know a lot of people have asked about it. I've always had questions about it. And I kind of went back through and I've been back testing some different ideas that I've been thinking about, and I think I came up with one that's decent. So, let's see here, guys. Look at this one. 0.618. You see that, guys? And then, guys, we're jumping in right here, shorting. And look at the potential that they could make, guys. From 83.98 all the way down to 5,863. Massive, guys. So just really look for those things. And spot this as well, how we talk about, guys. Do you see? Lower highs, right? Lower lows. And then, once we reversed, the people who can pick out the reversals the quickest. So right here, guys, people who got in here, or also people would see this here, and then that pullback for that higher low, and then people went long here. So you see how the trend changed, though, and now we're getting right here, where we're just making those higher highs and higher lows, and then it goes back to the same thing. So this is what I want to show you guys. Let's do one more test on this, see how if this one hit the 0.618. And then look, guys, look at this double top here. Do you see the M? As soon as it broke this neckline, look how much more we fell. Textbook. Absolutely textbook. And we know this stuff now, guys. It's never going to get us again. That's why we've been studying. And this one too, guys, 0.618. So this is the stuff I try to find, guys, and just really go through and pay attention to this stuff. So you can see the bounce that we had. It wasn't a good one. I mean, this is not a good reaction. You know, maybe our best bet, guys, is if we come back down, double bottom right here, and then move back up, which would be awesome. Then maybe we can get a big run. You know, we're going to have to get over that 4,300, but if we get over that, there's a lot of room to run because of how far we fell. And we'll get there at some point, guys. I love Bitcoin. You guys know, I truly believe in my heart of hearts the next bull run could take us to $50,000 to $100,000 at the top of the next cycle. And kind of from what I've been looking at, guys, maybe we'll accumulate all this year and then we start the bull run, and the bull run could last 2 years where you still have to hodl coins. So truly, you may not sell your cryptocurrencies if you're hodling for another 3, 4, 5, 6 years easily before the top of the next bull run. And it could even go longer than that, guys. Who knows? Maybe from the start of the bull run to the top of the bull run could be 5 years, 6 years. You know, you just never know. Bull runs are always longer than bear runs. And remember that. I've studied a lot on that too, guys. They last longer. So, guys, this is what I wanted to bring to you. Please let me know down low what you think. Leave all your opinions, different things like that, guys. Pay attention to false breakouts. You can even see, remember when we had this long wick and there's that huge wick we knew there, guys, a lot of people were taking profits, and that was false. Pay attention to these false breakouts in this market, because they happen all too often, and you don't want to get caught with your pants pulled down, you know, where you're in this trade and you see this happen and you go, oh man, we're going to the moon, you know, and all the moon boys and everything else get all excited, and then you get slammed back down. You see, we had that wick, and then we just moved sideways, and then we had that monster fall. So this is what I want to bring to you guys. Pay attention to the RSI, pay attention to the volume, pay attention to the patterns, the trend lines, support, resistance. If I didn't say candles, the formation of those, all that type of stuff, guys. But this is what I wanted to bring to you. We're at 36.32 right now. God bless each and every one of you.